U.S. futures are under pressure this morning after President Trump signed orders late Monday to raise tariffs to 25% on steel and aluminum. The EU vowed a firm and a proportionate response here. European Commission President Ursula von der Leyen saying in a statement, unjustified tariffs will not go unanswered, end quote. Joining us now, we've got Peter Harrell, who is the former White House Senior Director for International Economics under the Biden administration and current non-resident fellow at the Carnegie Endowment for International Peace. Good to have you here with us, and thanks for taking the time this morning. Just walk us through how you're kind of running the calculus around the tariffs imposed by Trump and now the response that has been also made public by the EU.
Yeah, well, thanks for having me on this morning. And obviously a significant development last night with the president's announcement that he's imposing 25% tariffs on effectively all U.S. imports of steel and aluminum from all countries around the world. This obviously builds on the tariffs that he implemented on China just over a week ago. So, he ran for election threatening a trade war. We are now absolutely seeing the beginnings of that trade war play out. I think with respect to the action he took last night on steel and aluminum, I want to make a couple of points. First, in some sense, we've been there before. He actually first imposed tariffs on steel and aluminum imports back in 2018. And so in some sense, he's just building on what he had done before. But second, consistent with his overall trade policy, what he's did last night is actually quite a bit more aggressive than what he did during his first term. During his first term, he had steel and aluminum tariffs, but he cut deals with some countries like Canada and Mexico to allow those things to come in tariff-free. And then he also had an exclusions process where companies could come in and say, hey, I can't find steel somewhere else. Can I import it without the tariff? That's all gone. This is truly universal tariffs with no exclusion. So quite a bit more aggressive than what he had done in the first term. Second, we are going to see retaliation out of Europe. The European Union had retaliated when he first imposed tariffs during his first term. Biden struck a deal with the EU where those retaliatory tariffs went back. The European Union, we saw European Union President von der Leyen say last night, those retaliatory tariffs are coming back. Now, I've talked to folks in Brussels. I think Brussels would like to negotiate a détente there, but if Trump doesn't show interest in a deal, we're going to see European tariffs on American goods like distilled spirits, like motorcycles, like, iconic American clothing like Levi's jeans. So I think we're going to be in for some friction over the coming weeks.
Peter, when it comes to how much this strategic, or does it at all really structurally change the U.S. economy? Because President Trump and the Trump administration making the argument that they want to bring more jobs back here to the U.S., they want to further bolster the U.S. economy here by doing so. Can they reverse that declining market share and the stagnating production that we've seen for so long when it comes to the U.S. economy?
So if I look just on steel and aluminum, if you look at some of the economic analysis that was done around his first term tariffs, they did bring back a bit of steel production in the U.S. On the other hand, they actually drove up the cost of steel in the U.S., which then hurt other manufacturing industries. And so you saw less growth in those other manufacturing industries. And I think one of the challenges companies are going to face right now that are buying a lot of steel, for example, to build, new car factories in the U.S., new bridges in the U.S., new semiconductor factories in the U.S., they're now going to face higher prices. So I think this may be good for the steel industry, for U.S. steel jobs. Less clear that it's going to be good for other kinds of manufacturing jobs that depend on steel. And I think that raises a broader question about just how effective these tariffs are going to be at actually rebuilding manufacturing writ large, as opposed to maybe rebuilding manufacturing in a couple of selective sectors.
Peter, how much disruption can the U.S. economy handle at this point?
I mean, President Trump has a lot of economic tailwinds at his back, right? We've had strong economic growth numbers over the last couple of quarters. Consumer sentiment has been okay. We are seeing a little bit of, slowdown in hiring and those kind of things. But obviously there are some strong structural tailwinds at the president's back. And so I think that the economy can weather, a little bit of a Trump economic tempest here. But if this expands beyond a little bit of a tempest into a full-blown kind of global trade war with a lot of other geopolitical uncertainty, that's the kind of thing where I think you might begin to see impacts on the top line numbers.
And Peter, I guess that's part of the concern. If we see this go from tempest to tantrum and even more of the trade war kind of spillover, what do you believe that means for inflation, where the Fed is already standing by just to see exactly what type of ingestion takes place within the economy through all of the trade war and the tariff talk and implementation as well?
Yeah, I think we need to be very clear that at least in the short and mid run, tariffs are inflationary, right? These are paid by U.S. companies importing the goods. And, we saw that last week when people were beginning to see tariffs on some of the imports from China and certain electronics and things like that, now costing 10% more than they did a couple of weeks ago. And we're going to see something similar on steel and aluminum. Now, so far, the value of the products that are being tariffed compared to the size of the U.S. economy, pretty small. We import, a couple tens of billions of dollars of consumer electronics from China every year. We import, some billions of dollars, 10 to 20 billion, I believe, steel every year. Macroeconomically, these aren't numbers that are going to move top line inflation. But if we start tariffing the world, at 10, 20%, when we're importing $3 trillion of goods a year, that is where you're going to begin to see some inflationary impacts. And that's why we've already seen Chairman Powell, talk about the fact he's looking at policy developments as he thinks about the future direction of rates.
Peter Harrell, really appreciate you taking the time. Thanks so much for joining us here this morning.
Thank you.